What's going
live
on,
from
everybody?
Charlotte.
What is happening? Craigos up in California.
Looks like you guys are at a hotel.
We are, man.
All right.
We're hanging out. We're hanging out all day today and tomorrow. We're excited, man. We're just like strategizing.
The mortgage conference.
2026 planning already,
2026, man. We're just trying to just deal with all this fun stuff that we're doing.
Cool.
And, yeah, man. I'm super excited today to have Greg. Where'd Greg go? Did we lose him?
He's here.
What's up, buddy?
He's hidden behind one of your blocks there.
All right. Okay. All right.
Sky's working off one screen today.
Yeah, I usually do have one screen, but it's a lot bigger screen. So, Greg, man, I want you to introduce yourself. This is a very intriguing class that we're doing, and I'm really excited about it. You have an inside source that is intriguing to say the least, and you're going to share a little bit about it. One of the things I want to preface is we all are our own .com. We're all our own CEOs of our business, and sometimes I think we forget about that. And Greg is here to share with us a little bit about that. He's had uber success, and he still works with the big banks behind the scenes. And I'll let him go ahead and introduce yourself, Greg, and let's get this party started.
Thank you, Scott. And really, I'm just excited to be here and to share kind of what I've been doing for the last 45 years.
Wow.
And what I'm about to tell you really kind of has changed my life. It can really change your financial life. It gives you a point of reference of something to talk to about to referral partners, to builders, to people that you can really build relationships with. When you're doing strategic planning, I strongly encourage you to consider this one word I'm going to teach you this morning that can really, really change your focus and how you do things in life. And it's the way that regulators judged me as a bank CEO. You know, I was one of those weird kids. I knew exactly what I wanted to do. I wanted to be like my dad. You know, he was so cool. He owned lots of real estate. He worked at a bank. He dressed up in a suit every day. He loaned money. And I thought, that's the coolest job in the world. So I was very focused as a kid. Just to give you the 20-second background, you know, by the time I was 18, I was working for the big bank. You know, I started off at the very bottom. I was the guy that ran all of the checks, you know, for all the community banks. I would put millions of dollars of checks in suitcases at 5 a.m. I'd take them to the bus station, you know, so the bus station could drive them. Yeah, that's how I got my life. So if we think, oh, I'm some kid that, you know, just took over his dad's deal. My dad retired when I was a freshman in college. So I started from the bottom, just worked my way up. By the time I was in my 20s, I worked for what was called the Ford Bank Group. I helped buy about a couple of dozen banks. I ended up getting to start an LPO, which is a loan production office, for another bank. And then I bought their assets and started my own bank as a de novo in 2007. We sold it in 2018. And so I've got a real fresh focus on the way regulators look at business, how they judge business, and how you should judge your business. So the word is camel. I know that sounds crazy, like a camel. Okay. Yeah. Now, when I get off of here, what I want you to do is I want you to go Google the word camel. It's all over the internet. Has anyone ever heard of it? No. You walk into your bank and you ask the teller or your lender, have you ever heard of the word camels? And they'll look at you like you're some weird goofball. Yet every CEO in a bank is judged by this one word. Matter of fact, it's judged by the OCC out of Washington. It's judged by the Federal Reserve. It's judged by the State Banking Commission. It's judged by you're judged by every FDIC, every regulatory force. So let's just go over what camels means, letter by letter, and then let me tell you how to put it into practice and give you a little insight of what else I do.
Greg, is it the traditional spelling, camel, C-A-M-E-L?
C-A-M-E-L-S.
S, camels.
C-A-M-E-L-S.
With an S, okay.
Camels, okay? So the first thing is C stands for capital. You know, capital is king. If you don't have capital, you don't have a business. There's different ways of looking at capital. You know, when you look at a person's financial statement or you look at your own financial statement, you know, you can take your assets minus your net worth. That's capital. You can look at your income that you generated from your business and see what that bottom line is. Banks will say, okay, that's retained earnings. That goes into capital. Okay, so Capital is something you got to have to run a business. You know, in banking, the A is for asset quality. They want to know if your asset quality is strong or good. Now, they rate these letters based on a 1 to 5 level, 1 and 2, 1 being the very best in the country, 2 being great, 3 being you could go either way, you know.
You could be here today.
You could go either way, you know, and a lot of times they put banks that are 3s in what's called an MOU, a memorandum of understanding. And then, you know, they start looking at you on a more frequent basis. Instead of having an 18-month regulatory exam cycle, they'll go to a 6-month or a 12-month. A four is you're in trouble. You got to make some changes in your bank. It may be that you got to change management. A 5 is, hey, do we sell the bank? Do I shut you down? This is how they determine whether they shut a bank down or not.
Wow.
And they use this word to determine that process.
That's crazy.
So a 5 is when they bring what's called a supervisor, and to tell you what I do, they bring us. Since my bank is so, they bring a supervisor in, which is probably about a 75-year-old ex-CEO of a bank, just to answer questions, to oversee it. Well, what the CEO does is they all know me, and so what they do is they call me and they go, hey, we may have to sell this bank or not. Would you come look at it? And then you do all the work, because we don't do the work. You come. We want you to write the regulatory reports. We want you to, you know, focus in, sit on the boards of both the bank and the holding company. We want you to make those determinations. So we talk about A being asset quality, but what is A in your business? You know, A in your business is your referral partners. That's your asset. You know, A in a business could be account receivable turnover, inventory, but really referral partners, the way you do your lead gen, that's your A.
CRM. Okay. I mean, it could be your CRM, your past database.
Absolutely.
Assets, man. Could be. Absolutely.
Absolutely, Scott.
Yeah.
M is for management. How do you manage who you work for? How do you manage yourself if you're in business for yourself? How do you manage your health? I mean, as a CEO, I would go get a physical once a year. I do a stress test. I would hand that to my board of directors, so they would know, okay, what type of health I was in. They would actually know what type of succession planning I needed to make, and the regulators would know my health. Okay, so know your health, know who's managing your business, know if you're doing it. The E stands for earnings, of course.
I mean, just to touch on the management, manage your mind.
Manage your mindset.
I mean, like that's right now, I think, is the challenge for, you know, myself and a lot of people. Like what is happening, what's happened, you know. And so how we manage that is how we show up. Because remember, we talked about the conscious, subconscious, and we're putting stuff in, and it's believing us. So yeah, management's huge.
So management is huge, and matter of fact, they will judge management as the second most important thing behind capital. Okay,
no kidding.
So
okay.
they really believe management is, you know, one of the things I do when I go in is I have to, you know, I manage by doing assessments of the board. I manage, and these are all really smart, rich people, you know, unlike me, right? And so I manage. Sometimes I have to. I don't necessarily have to. Replace management, but I need to enhance management. I might get the CEO and the president some help. You know, this bank that I'm in, I completely ended up, the IT department quit. I ended up replacing the IT department. I came up with the people that did it. So there's a lot of factors that go into it. So of course, CAME earnings, we want to know if we're earning the appropriate amount, right? We want to know if we're making enough money to make a living in our personal business. But from an earnings from a bank standpoint, we want to know if we're getting a 1% ROA, what our efficiency ratio is. There's a lot of things that go into it. You can Google this or contact me for more information. But earnings, obviously, is a very crucial deal. L's for liquidity. I want you to know that you've got to keep, you know, in a bank, liquidity is so important. You know, we had to keep so much in cash. We wanted to make sure we had Federal Reserve lines set up for runs. You know, the Federal Reserve is really a backstop in case you have a run on a bank. How we handle that. If we want to go borrow some money to grow the bank without going out and deleting our stock ownership, we would look at liquidity and we'd say, okay, let's hit our Fed line and let's make sure we don't do it for more than 10% of our assets. I mean, there's lots of things that go into it. So CAMELS, what is S is sensitivity to the market.
Sensitivity. Okay.
It's just understanding the market that you're in, who you're dealing with, what you do with it, how you present it, what you think you can enhance in it. So knowing your market, knowing the players in the market. There's where I live is Lubbock, Texas. There are 31 banks, true banks in Lubbock, what I call chartered banks. Waco and Lubbock, Texas, are the two most overbanked cities in Texas. You got to know the facts of what you're around and who you're dealing with. So that's a quick synopsis. That's a 10-minute synopsis.
Yeah, that's great.
All regulators do. There's a lot of other things if you ever want to ask me, like what will cause the next financial crisis or crash, how banks play the shell game. I wrote down a few questions. What do I really think about regulators? Why the broker business will continue to grow in my business, and is buying stock a good investment? So any of those questions that you want to ask, I'm open book to tell you anything you want to know today. But I'm very passionate. As you get older, I think of you, Kobe. You're doing such a great job at what you're doing, and I think hopefully at some point you'll be like, not like me, but like I own real estate, I own several houses. I have my own note receivable on hard money. I have, I have the mortgage. I still bank consult. I have a small business. I have a business that will actually make me a little more money than some of the small banks. So, as you get older, I want you to be thinking about this formula and how you can develop it to really evaluate your business, know where to put your capital, if you're making enough money, how you're keeping enough liquidity in your personal life, because you're not just a CEO of your own business, you're a CEO of your own life. And so I want you to remember that as you go forward. So that's
Kim said, that's great. She goes, I want to know the answer to all those questions. The next market. Kobe's got a question too. What you got, Kobe?
So so you introduced this by saying it's something that you can use as an asset to leverage with discussing with your partners. How is it that you would see this best used as a way for us to have a strategic advantage going into the next year?
Love that.
Right. It's a great question.
Great question.
All right. So what happens if you were to go out to not a banker? What if you went to your builders, partners, and you said, hey, do you know how your bank and your CEO, when they look at your loan, is thinking about your business? No. Have you thought about how you should develop your own business? No. Can I give you a one-word formula and you can Google it after I leave? But let me just talk to you about it. And here's the formula. It's CAMELS, and it's, capital, asset management, earnings, liquidity, and sensitivity to the market. Explain it in a short version and just really give them something without asking them for anything in turn.
Thank you.
So, yeah, so what I would do, where my mind's going is, how, Kobe, we talked about the 4 parts to a sale and having that conversation, like, where's the bottleneck?
Mm-hmm.
Now you could take, once you finish with where's the bottleneck, let me show you another acronym called CAMELS, and let's talk about these 6 things. So just so you're forward thinking when it comes to all of these, and let me just break each one of them down specifically. Go into ChatGPT and go, tell me about the C, tell me about the A, tell me about the M, tell me about the E, like those, and then literally put a presentation together and go, this, you are your own CEO. Every agent's their own CEO. Every CPA, financial planner, divorce attorney, every single person should know about this and be conscious of it and doing the right things to be successful, short-term, long-term in their business. Make sense? Yawanda.
Yes, for sure. It's nice because I have both of those right here with, like you said, the leads conversion, follow-up, and then call to action. And then, I feel like especially, I love your S because I think all of us are seeing a big part of the S right now going on, that I feel like I love being able to have conversations to help people think different. So thank you.
Yeah, but don't forget that although you may think the S is the greatest, the other ones is how you truly improve and build a business. It's how you make sure that your business is okay. Rate it from a 1 to 5, just like the regulators do. I sit down every quarter when I'm writing my estimated tax, to the government, whatever it is, and I'll actually think to myself, okay, what would I rate my capital? And if I've got too much, too little, how many referral partners do I have? Do I have one? Do I have 10? Do I need to increase that? Or do I need to make sure that I'm managing those referral partners? Okay, so think about not just one letter, but all of them when you're looking at strategic planning.
Definitely.
Yeah, when you self-examine, man, you got to really be honest with yourself. How many times have you talked to somebody, a loan officer, when we're coaching them, and you say, well, how many loan partners do you have? And they'll say, oh, I've got 10. Well, you're closing 2 loans a month. You do not have 10 loan partners, so you have to really be honest with yourself when you're doing the self-evaluation, unless you got a really good coach or accountability partner that can really, kind of stick your feet to the fire and make you really analyze these things. And that's what happens with you. They're bringing in the guy that's holding them accountable.
True.
So,
yeah.
Very cool.
And I think the database too, man, like you look at your assets, are you getting are you getting referrals from your past database? If not, why not? You're not managing correctly. There's a sensitivity. You're not addressing that. You're not addressing a couple of the letters of the camels. You can relate this to everything.
Yeah, you can relate it to everything, and you can relate it to your spiritual life if you want to.
You can relate it to your marriage.
Everything.
You can relate it to your marriage.
You can sit down and evaluate every aspect of your marriage, your life, your spiritual being, your business. It applies to everything you do.
Love it. Yolanda, what you got, my friend?
Yeah, thank you, Greg. This has been amazing. Definitely worth a rewatch, a replay.
Mm-hmm.
I was reading this morning. There's a book I'm reading right now. The title is Wealthy and Well Known. And one of the main hypotheses of the book is that you can't do too many things. So Rory talked about a gentleman. I think he has the School of Greatness podcast. And at the time, he was doing like 17 different streams of businesses. And the advice for him was to cut everything off and to focus on just one. According to Rory, I took that as a takeaway from my reading today. He says, if you have diluted focus, you will get diluted results. So I'm just trying to match that to what you just said about you are in this business, because I'm the same way. I like to have my hands in many things. But with this, he just gave me a pause to just think, should I just zero in on one? What's your take?
It's a great question. So most people have read The One Thing by Gary Keller. It's an excellent book if you haven't read it. But what I would say, Yolanda, is let's ask the real question. What does the Bible say about it? Okay. And the Bible says you should have 7 sources, right?
7, right?
Cast your bread upon many waters, right?
Yes. And so there's nothing wrong with having 7 sources, because that's what the Bible says. That doesn't mean you can't focus your energy on what you do best. I mean, it's kind of like what Scott has taught us, for our weaknesses or what we're maybe not doing so well in our business. If we've got a business that's not doing so well, let's go out and hire that done if it's an $8 to $10 an hour person. But let's focus on our strengths. We all know the SWOT analysis. We all know how many calls we need to make to do a mortgage. But let's think about, okay, do we want different streams of income? Yes, I'm all about the one thing, but I'm also about one thing at a time. Like get your mortgage business under control. And after you've done that and you got plenty of capital and you feel like you've grown that to where you're happy, let's think about, do you want to increase that business or do you want to spread out and diversify yourself? Because we all know, like one of the reasons I got in the mortgage business, I knew someday, I just got it 3 years ago. I knew someday we're going to have a refinance boom. Okay. I didn't know when. I can't predict that, but I can know, okay, the real estate market may suckaroo, but my refinance might take care of me. Okay. Good question.
That was a great question.
Yeah.
Where'd Craig go? Craig, what you got, buddy?
You must be on mute.
Hey, and while we're waiting for Craig, hey, Greg, we're getting requests of you coming back on a monthly basis doing market update for the Yeah.
I think he just
Dude,
made
yeah.
that up.
No, I'm not. No. We're like, hey, Greg, it would be great if you would come get a monthly basis.
Hey, so we got 10 minutes left. Can I talk about these questions that I wrote down?
Please do, yeah.
Yeah.
I think that would be fun. So my first question was, what caused the next financial crash? These are things that
Not what, but when, so I can just I can go cash heavy.
Yeah. Go. So here's what I really think in my heart of hearts. It's not going to be caused by banks. It's not going to be caused by mortgage people. It will come from credit unions. And let me explain why. Credit unions are now they're growing exponentially. You know, banks, when I started my bank in 2007, there were over 15,000 banks. There have been over 25,000 banks at one time. How many banks are there today? Less than 5,000.
Wow.
Okay. Regulators want just a handful of banks. But what they're doing is, because these banks are all consolidating at this time, credit unions are exploding in essence because of their non-tax exempt status. And they're now giving credit unions the ability to make commercial real estate loans. Right now, 25% of their capital is being talked about 50% of their capital. And what happens is, it's kind of like the savings loan business when they don't understand, hey, if rates go to 18 and I got 30-year fixed rates at 5, I'm going to go broke because I'm going to lose my capital. Well, in a credit union, they're not hiring people who, in my humble opinion, are bright enough to understand camels. They're not bright enough to understand how to look at C&I loans and real estate deals that are large, not just mortgage deals, but $3+ million deals. And when those deals go south, they're just like a bank. They're going to have capital issues, which could seriously cause a real, in my personal opinion, a real crash in the economy.
Crazy. All right. So when's it going to happen?
Like getting a mortgage license, I have no idea.
Okay. All right.
Okay. So how do banks play the shell game? I mean, that's a great question. So I'm in the middle of it all the time. I was with the bank, First National, the big bank, the $1.5 billion bank, when they bought us back in the early 90s, and they paid 2.5 times book, which means they paid a 1.5% premium on all deposits, which, banks are really not worth what they have in loans. Banks are really worth what their core deposits are, what all their deposits that they either have non-interest, the way it's defined by regulators, 12 months and less of a duration of a loan,
He's so
of
smart,
12 months or less,
He knows his
is
shit.
considered really a core deposit. Okay? So
opportunities.
the way they play a shell game is they go out and buy a bank and they'll pay 2 times book or 2.5 times book. And so they have to take anything over book and they put it in a category, in an asset called goodwill. Okay. Goodwill just sits on their balance sheet. It's never depreciated. I've never seen a regulator come in and say, hey, we need to, you've got an impairment in your goodwill. It's never been done. And so you look at places like Wells Fargo and Chase and stuff like that. They may have billions of dollars in goodwill, which earns them no money and sits on their balance sheet, is never depreciated. That's how they play the shell game. They buy something, they put that premium in goodwill, and it just sits there. And it's considered an asset, even though the asset never does anything for you. So,
which is part of the camel. Which is part of the camel, is what you're saying. So it makes them look better than what they really are, maybe. Or I guess with $1 billion, you're looking pretty good.
It makes them look like they have excess capital when in essence they really don't.
Wow.
Remember that you can look at any financial statement of any bank, whether they're publicly traded or not. They have to file it 30 days after the quarter. So you can go in and look at you can look at their call, just Google, pull a call report, but in the bank you're working for, see what their capital is. The capital used to be, the reason the banks really got in trouble to begin with were they would let banks leverage themselves to 40 times capital. So in essence, 40? if you had $1 million, you could loan out 40 million. So
oh my God.
Today that ratio is $1 million, 8%, 8 million in capital.
Wow.
The secret number is 10. Secret number is they want you to keep your capital at least at 10%. Do I think buying stock in a bank is a good investment? There's only 2 or 3 people that make money in the bank. It's a CEO, president, maybe the CFO. It's a great investment if you can invest $100,000 and get on the board and make $5,000 a month as a board member, because think about it, you just made a 60% return on your money every year, right?
Yeah.
But if you're not on the board and you're just buying stock, there's only 3 ways to buy stock and make money. It's when you buy, it's a dividend, and it's when it sells. That's only 3 times. So it's really not a great investment for people. So I would struggle to start another one because of that. So why do I think the broker business is going to continue to grow? I think it will continue to grow because as banks consolidate, they really don't care about mortgage. They're taking our core deposits and they're deploying them in some other big city. And so mortgage people are not as successful as they used to be. Because of that, I see retail people starting to make that shift into the brokerage business. So I think we're in a great opportunity and a great time in our life. That's all I got.
Love it.
Greg, do you have a question?
I had a quick question. Just a comment. Thank you for sharing here. It's cool. You've heard of a management concept called the 3 Ds.
Yep.
Okay. Decide, delegate, and disappear. All right.
The
The other,
decide.
the interesting thing is back in, I don't know, it was 07, 08.
There were too many people.
I worked for the
started to
FDIC
disappear.
for a little bit to shut down banks. So it's kind of an interesting process, me going in and actually going in. And it was interesting how gentle they were with the employees, letting them know that, hey, we're going to pay you. Your severance is here. Your vacation time is all in there. And it's just very interesting how they went through that process. So it was interesting just to be behind the scenes, being a knucklehead, watching what was going on.
And I bet you always saw it happen on a Friday.
Of course, give you the weekend.
Yep, that's right. That's what happens. If you see a bunch of examiners having coffee across the street from your bank, you better get worried on Friday morning.
Get your money out.
It was interesting some of the assets some of these banks had and what they were lending on and going on, and then doing a workout, and then you have what do you call them? The receivers going in and help managing the assets. And that I think the receiver business is a good business to be in.
It's a good business to be in because those are typically who knows who's going to buy the bank to begin.
Right.
Yes.
But it's interesting what kind of assets they come across.
Yeah.
Boats, cars, jets, and all kinds of cool shit.
Can we get some insider trading when we know a bank's going to be bought, Greg?
Well, no, I just happen to know someone that was involved with it. And they say, hey,
Short 'em.
and I can use a dose, so I went in and worked with them.
Buy low, sell high.
So before I presented this morning, I went into call reports. I've got some programs. There's about 70 banks that I think could fail or not fail in the next year. So
you're going to be busy is what you're saying.
Well, I look at them all. So
Yeah.
Q, you got a question? I don't want to quit without.
Yes, sir, brother. Thank you for everything. It was awesome. So what I don't get is like you get like Silicon Valley Bank, right? Oh, we lent out too much. And everybody's taking their money out. We didn't know. But then it feels like an inside job because then you can have someone like Jamie Dimon come in and be like, oh, it's like a fix and flip. We're going to take this for nothing. And you're getting it for cents on the dollar and pull it across.
Oh, Q.
It has to be an inside
Q
job. And
nailed
don't
it.
record
Q,
this and
Q,
push it out there.
Q, you just answered a huge question. Who really causes the financial crash in America? It's the regulators. So when I was going to talk about I don't want to talk about them in a negative factor. I won't have a job next month. But I'm telling you, regulators are the cause of the crash. Okay?
Wow.
So they're the ones that come in and start hammering the banks to do certain things. They required our bank, now they've got what's called a CRE ratio, which means you cannot loan more than 300% of your capital on non-owner occupied real estate. Well, guess what happens? When you get to that level, they're pushing you to do a business now that you don't understand, which makes you take losses. So yeah, it's all regulator driven.
I learned something a long time ago. I know somebody that was the head of the organized crime division for the SEC. And he goes, Q, you don't make money in politics. You make it in real estate.
That's right.
It's true.
Anyway, okay. Any other questions? Jeff? Oh, no, you didn't have a question. You had to, just saw your read.
Greg, I think for me, this was amazing. I think just how knowing a little bit about the banks that have nothing to do with us, but have everything to do with us. But then more importantly, how to incorporate it into our businesses personally, into our life, into our marriage, into our health, everything. So I sincerely appreciate you, man. I've always been there. You've always been there. So thank you so much.
Thank you for letting me share.
Yeah, man. Awesome.
Yeah, good stuff. Thanks, Greg.
All right, guys, we're going to head to our meeting. We got a long day, and we're going to be bringing you more stuff as we go along. Look forward to hanging with you guys same time, same place tomorrow morning. Have an amazing day, everybody. Appreciate you for hanging out with us. And as always, be safe. Take care, everybody. Good stuff.